Hi everyone. So this is a market recap for Wednesday, September 18th. So if you look at the news, you can see the Fed funds rate was supposed to be released. So it was released. So there can be volatility in the market for sure on today. So this is the recap of two trades you could have taken, the two trades we took today. So I'm going to discuss that with you as a recap. So this is the NASDAQ index futures. You can see on a previous day there was a gap. So at on this date we were expecting slightly the price to go and fill towards the gap. So this is the hourly chart. You can see there's a fair value gap, the slight expectation of the price going down, and also around 9 a.m. New York time. You could see we were expecting the price to go down slightly at that time. So we were having bearish bias. So we started the day with the bearish bias, me and the team. So we were expecting at this time a slight liquidity sweep towards the upside and then the price to go down. That's what our expectation was. This is the 15-minute chart. So you can see the London highs were here, Asian highs. So this is the New York AM session, 9:30 over here. So we were expecting the price to make, as I said, this a liquidity to the up and then the price to go down. With that expectation, we were looking at the market at the opening time. So you can see at the start of the market, there was a huge push downwards, a big displacement downwards, and then you can see this the lower entry was broken down. So there's a market structure shift. If you look here, this area from here to here, you can see there was a market structure shift. That's a positive sign for us. You can see it also made a fair value gap over here at this place with the displacement, so it's a positive sign. So with this we went to the lower time frames. So we were in the 5-minute charts when I did that explanation. So in the 5-minute charts, the market structure shift, huge displacement to down, and then a fair value gap at this point. So this is where we were looking for an entry. The team was looking for entry at this point. So with that also we went into lower time frames. So you can see this is where we placed the entry, expecting the price to come and rebalance the fair value gap and then the price to go down. So the entry was hit at this at 10 a.m. and our price, the take profit target was the sell side liquidity residing below the London close, below the London session. So that was our target, and we were looking for the price to go there, and the price quickly went and grabbed for a 1 to 2 winning trade. Okay, so then that was the first trade. Then second trade was in the New York PM session that we took. So this huge volatility is due to the Fed funds rate release at 10 a.m., which 2 p.m., the calendar event which I showed you earlier. So at 2 p.m. The Fed funds rate. So we didn't trade at that time. We were waiting for the market to react to the news. So once the market reacted to the news at 2 p.m. New York PM session, then we were waiting to see how the market would react, and then we noticed that there was a break of structure at this point towards downside. So that gave us a clue, because initially we were having a bearish bias as well, because we saw a gap at the bottom, because we were expecting the price to fill the gap during our analysis. So basically with that idea as well, and with the market reacting to the Fed funds rate downwards, like after the news, we can see there's a market structure shift, slight shift. So which gives us again an idea of a bearish entry. And also we could notice that when the displacement happens, it broke this higher low over here. The market was having higher lows, higher low, so it breaks. So that is again a shift, market structure shift at this point. Like, so we were looking for a fair value gap imbalance. So we can see there's a price imbalance over here, fair value gap. So we were expecting the price to come and retrace and fill that imbalance over here for an entry. So this is one possible entry you could have taken. Me and the team, we took that trade over here for a 1 to 2 risk to reward ratio. You can hold these trades and keep for long, but I'm showing you a simple approach where you could get 1 to 2 risk to reward trades. But then we also analyzed this going to lower level, because once we were expecting the price to come and fill this imbalance, when this move over here, we went and analyzed it in a lower time frame, 1 minute. So if you look here, just 1 minute chart, if you look here, so this is that price leg coming up from the 5 minutes. If I take you back over there again, so this price leg, because we were expecting the price to come here and reverse back bearish to take entry here. So we were analyzing this price leg in the 1 minute. So if I take you the 1 minute, you can see that price leg we were looking here, and over here higher highs and higher lows being formed, and we are expecting the price to come to the fair value gap in the 5 minute and go down at this level. So this is that 5 minute entry which we took. But then we were analyzing further in the 1 minute. That was another option for any one of you. So you can see in the 1 minute higher highs and higher lows. Then this higher low is broken with displacement, like towards downwards. If you look at the 5 minutes, you can see this candle over here. That's what I'm looking into. But if I go into the 1 minute, you can see this higher low was broken with a reasonable amount of displacement. But anyhow, we already have the bias from the 5 minute, right? Confirmation and the bias. So this is like a more refined entry if you take it that way. For a further refined entry, when this market structure shift happens here, price breaking towards down, so then you can look for a fair value gap over here in the 1 minute for a further refined entry. So if you look here, you can see there's a small fair value gap seen from this candle to this candle. It's a tiny fair value gap, right? But you can go to the 30 seconds and refine this. So if I take you to the 30 seconds chart, so if I just take you to the 30 seconds chart at that entry, okay, so that's what we posted in the group for anyone to take the trade in our team. So basically over here you could see this is that 1 minute candle set of candles, but we were looking for a fair value gap. But you can see in during the break of the structure down over here, you can see there's a small fair value gap, like from here to from this candle to this candle. So you can see small fair value gap. So it was not very clear in the 1 minute. So we went to 30 seconds to see that. We noticed that. So the entry, basically what we did was the entry was placed here to see the price to come and fill that fair value gap imbalance in 30 seconds, because now we already expect the price to go down in the 5 minutes. So because of that, we came here expecting that, and we posted in the group for the team members that there's a possibility. So these are all possibilities, right? So these are game of probabilities. So then the price came and filled that entry again for a risk reward of around 1 to 2, 2.45. But then the price targets were set based on the 5 minutes, the take profits. So if you go into the 5 minutes chart, so the price target was set because this was the break of market structure shift, right? This one. So we are taking entry here. So our profit targets is going to be towards this bottom end of this price leg over here. So because the market structure shift happened here, so we are expecting the price to come and again reach that point. So that's where the take profit entries were. But again, taking you to the 30 seconds where the entry was made, the third entry for the day for any of the team members. We don't mean you have to take all three, but we are showing three possible entries. You could have taken only one of these, right? You don't need to take all three of them, but then you can see the profit target has been reached. So the concepts are based on the ICT concepts of market structure shift, looking for liquidity grabs, buy side, sell side, then looking for imbalances, fair value gaps, and having a bias, and also confluences with some extra information, like meaning extra analysis in the market, plus the volatility for the day. So that's the post market analysis for Wednesday 18th, and we will see you with another market analysis to improve your trading abilities. See you next time in another recording.